Last time, on Trading Bull Z, SPY had come up against a critical resistance level, but it looked as if it would break through. But then today, it came back down and closed below yesterday's highs. What does this mean for SPY going forward? And what happened to our heroes' plays that they swung? Find out on today's exciting episode of Trading Bull Z. What is going on, Z Traders? 𝘉𝘓𝘓𝘓 here, and today we are here with your daily market recap. If you find any value in what we do here, consider subscribing for more content and market updates. And if you wouldn't mind, go ahead and destroy the like button for the YouTube algorithm. Follow us on Instagram and join us live Monday through Friday during market hours on our Discord server, where we have over $5,000 worth of learning materials, all for the wonderful price of, drumroll please, free 99. That's right, free 99. Be there or be square. So, ladies and gentlemen, let us get into it. By the way, we have a new episode format that we're experimenting with, so let me know what you think in the comments section. Do you like it? Do you not like it? Do you love it? You hate it? Whatever. Drop a comment below. So, let us talk about SPY, because that is what we came to see today. It is the star attraction, and it is the index that every trader who is in the know follows. Now, we need to talk about where SPY closed at. Okay, we got 292.74, which is below where we closed yesterday. We're looking at the 3-month daily chart, right? This is the same chart we look at every day after close on our recap videos, and I told everybody yesterday. What did I say would happen yesterday? What did I say yesterday was going to happen today? I told everybody we was going to get rejected and start to close lower. And look what happened. We got the first red candle on our way back down.
What did I tell you? Didn't I tell you? 'Cause I told you. And when did I tell you? A long time ago. And what did I say will happen when I told you? Exactly what just happened.
Now, this pattern is important. One of the things that I talk about in chat is the 4 horsemen of the apocalypse. When price levels hit the same mark 3 times and reject, typically the 4th time is a dookie shoot. It falls off the cliff and just takes a nosedive, okay? Be very aware, because this is the 3rd touch. If this does not break out to the upside, which I do not believe it will, SPY with this gap up did not leave itself any runway to chop. Okay, SPY needs to chop in here, but it gapped all the way up. Strong buying. But guess what? There's no catalyst. There's no reason why SPY needs to trade above this level. Now, granted, we're getting there slowly every day. Things are starting to open up. We're seeing some progress. We got some stimulus, maybe more stimulus coming. I don't even know. That's probably like, this has got to be pushing upwards of, because we spent 5 already, and then they got the Fed print money and all kinds of, so it's got to be in the neighborhood of about 10 to 14 trillion. This whole thing is costing. So, if you like being able to go to the store and find a loaf of bread for $50, if they keep printing money, that looks like where we're going to be headed. And you heard Jerome say it himself. He doesn't care about inflation right now. That's like the last thing on his mind right now. But, hey, it is what it is. So, today, like I said, SPY fell down. It took all day to do it because, the Bears and Bulls was fighting, but ultimately the Bears lost, okay? Now, if we look at this on a closer time frame, we can see some things going on. After market close, we're not really concerned about that because there's no volume there. On the day chart, it does appear to be oversold. On the 30-minute chart, I don't know how much weight I want to give to that. Let's look at the hourly chart. Yeah, a little bit better. So it's still oversold. So at this point, it's probably obvious to some people what's going to happen tomorrow, or it should be if you follow me, without even looking at the other chart. Let's come over here and see what's going on. So we got some action on SPY. We got a perfect reject here. I got into puts yesterday. I also called them out in the room, but I got out too early. Should have waited for the end of the day, but I bitched out really hard. And I left a lot of money on the table, but that's okay because guess what? What do we always say? Profits is better than a loss. Okay, I'd take $1 profit over $100 loss any day of the week and twice on Sunday, right? So we got this hourly chart here. We can see what SPY's been doing, trading up and down, up and down. Now it looks like it's time for it to head on back down. But before we do that, there's levels that we have to break first, like this one right here, actually, that we're at. Because remember, I told you guys on previous videos, these previous pivot levels still are in play for future stuff. So you can see we're right at it, okay, like right at it. So if we break, what is this, 291.39 with volume, you could look for some puts preliminarily, and then we could be headed down to, what is this, 287.89. I don't know if we'll get that low. We'll see. And then after 287.89, if it falls further, we got about 284.39. So yeah, those are some levels to look at for SPY. Tomorrow, we'll probably chop around a little bit. People needed to take some profits unless we get a serious negative catalyst. We probably won't see any significant drop off. We'll probably chop around tomorrow before SPY decides what direction it's going to go in. But because we got this pivotal close below, where we closed yesterday, that is a clear rejection from the price levels that we forecast. Just like we said, rejection, called it perfectly. Like I said, should have held my puts. I do expect this to continue. Chopping in this little region here, up, down, up, down, up, down. So you can make some money if you know what you're doing. Buying puts at the rejection, buying calls at the support. I mean, we could do this all day tomorrow, right? So we talked about the supports and resistance levels. We talked about where to look to buy calls and put entries. So you want to buy call entries around 284 if we ever get there again, or anything below, depending on where the bounce is. So like we got this level, see how the previous levels still correspond right there. So boom, we got this going on right there at 277. So just take a look at price levels, and what I recommend everybody to do is, this is TradingView. The pivot points are legit, and I also verify them in my Fidelity Active Trader account. So boom, come over here, hourly time frame, looking at SPY, we can see after market it's up on the hourly candles. It has come down to the 50 EMA and it has bounced, okay, and we still have the same price levels up here. Anything past this, we're looking for some calls. What is this, 296.36? So look for calls in SPY over 236.96. Look for puts. If we break tomorrow, I don't want to say break 50 MA because it could jump down and gap back up. You don't want to get caught like that. But if it breaks 290.15, then you have an entry. We do have a gap to fill, as you can probably tell. And I wouldn't be surprised if we fill that gap sometime between now and next week. I don't know that we'll fill it this week, only because SPY came too far to come back down here in the same week, although I'm not going to rule it out. But I would say I don't believe that this will happen this week. I think there's a lot of chop that we have to go through first, depending on, economic data that needs to be released. So we will see. And speaking of economic data, let's take a look at what is coming out. So Tuesday, we had not too much craziness going on. Building permits, housing, FOMC. We had Jerome Powell speak along with the Secretary of the Treasury, Steve Mnuchin, gave some remarks on where they think the economy's headed and what what we're gonna have to do to prepare. Tomorrow we're gonna be looking at mortgage rates. No, that's not us. Mortgage market index, that's important. Crude oil imports. Ooh, oil prices. Okay, so we got to watch the oil tomorrow. Inventories. Okay, a lot of stuff coming out. A lot of oil stuff tomorrow. So be aware of that. Watch the oil indices. You might be able to find some plays depending on how those numbers come back. More than likely, they'll come back because of the way that they forecast the estimates. They'll probably come back better than expected, of course, just to kind of cushion, everybody's concerns. So yeah, be aware of that. That's what's coming out tomorrow. So be careful trading, because when news drops, you don't ever want to be caught, in the middle of a trade when news drops. That's not great. So with that being said, that concludes our market SPY roundup. Now, let us get into the plays. Did they hit or did we get clapped? Let's take a look. So we have some plays that we called out yesterday for earnings. So let's take a look. So the first play that we called out yesterday was Take-Two Interactive. I've been harping on this since last week, and let's see what happened today. And it's crazy because I've been calling out all these plays in chat, and I haven't even been able to get into them a lot of the times. And I've just been looking for stuff, and I'm like, my plays are hitting. Why am I not taking my own plays? Duh, common sense. And check it out. What do we have here? By the way, their earnings are coming out this week, and they're going to crush them because they're Take-Two, and they have Red Dead Redemption, and they have 2K, and they have Grand Theft Auto. I mean, come on, the VC game. I mean, Stevie Wonder. It doesn't take a rocket scientist to see what this is going to do. So, but I will caution people, and this is a disclaimer. Anything you see here, don't trade it. I'm not a financial advisor or anything like that. I'm just giving my thoughts on technical analysis on where I think stuff is going. It's, it's not investment advice, not to say that you should go out and buy 100 calls on, Take Two Interactive tomorrow or anything like that. So, do with the information what you will, but that's not what I'm suggesting. But what I am telling you is that one of the strategies that I've learned recently how to take advantage of is playing the IV run up to earnings, because we trade options here, okay? You could trade equity. To me, options is more attractive because you can make way more with less money in a shorter amount of time. But anyway, we like to play the IV up to earnings. So we get the contracts 2 weeks out, and slowly but surely you get a little bit more interest. It rides up, earnings is coming, the IV goes through the roof. And even if the stock trades relatively pedestrian or sideways, you still make money because of the IV run up, because the market is unsure of what the stock is going to do, right? So today, look at this candle right here. I mean, that's just nuts, right? So I got into Take Two Interactive at the bell. So at the very beginning of the day. So let's take a look at the daily chart. So what is this, like 8:05, 9:30? Yeah. So we got in somewhere around here, and then it's been like trending higher, like somewhere in this candle, and it's been trending higher all day, right? So obviously I think they're going to kill it in earnings. They came down a little bit, but the whole market at the end of the day was down. At the end of the day, it took, it just fell off the cliff at the close, right? The next ticker symbol we were talking about is BABA. I actually didn't believe in them, Alibaba, because I just thought they were pedestrian. Their chart pattern was not convincing, and it was lackluster for me, right? So, but today they made me a believer because they went through the roof. Yeah, this is the chart pattern. So we got a double bottom here, and we know what that means as investors. So we did get a little pullback here. I don't love that for the daily candle, because we talked about this with SPY. These pin bar closes are very dangerous because they can signal a reversal. Okay. But we do have MACD turning green, but we are oversold on RSI. I don't love that. I am also holding these. We'll show you the outcome of this. I did also get into this in the beginning of the day. So let's take a look at BABA. So it's almost at a support level on R2, so at least we have the comfort in knowing that it'll bounce before earnings. Hopefully they have positive earnings so we can see a bounce and we can make a little bit of money. You can see their earnings down here on the 22nd. We'll see. They'll probably chop in here up until then. Likely the market will recover a little bit in the morning, and Alibaba should recover with it. May or may not, depending on what happens with Chinese stocks overnight. I don't know. We will see. BJ's, they were my dark horse. I called them yesterday. They actually took a crap today. Didn't really do anything of note. And I did get into this play, but you can't win them all. They took a dump and kind of left me high and dry today. So that wasn't fun. As you can see, look at this daily candle. That is definitively bearish. There is no bottom wick. We do not like to see that because that suggests a continuation to the downside tomorrow. If that is the case, we are getting the hell out of this play. I thought that BJ's would do well because, well, they're a wholesale club, and what's been going on throughout this whole time, right? People buying stuff in bulk and just, things. So, like, for the same reason I think, Sam's Club has done well, right? And BJ, they had, they've been going up steadily over time, as you can see from the chart. So why bet against them, right? Although I don't like last earnings because they kind of fell off a cliff a little bit there. But then look what happened. Boom. So if you have the adamantium, vibranium hands to hold through this, which most people don't, you get rewarded when you do. See, look at that. So if the same thing happens here, do I have the vibranium hands to hold it through that? I don't know. We'll see. But let's take a look over here. BJ's. Let's see right at a resistance level. Jeez, like right up against it. If we break this, I don't know, man. We're down to, looks like 2806. Part of the reason why BJ's is down, by the way, is because a analyst came out and put the price target at $22. Not exactly encouraging before earnings. So yeah, we'll see. Hopefully they rebound. If we don't, we're gonna cut bait on this. Let's see. We got ADI, which somebody called this out in chat earlier, and I took a look at it, and I thought it was pretty convincing because Nvidia's earnings are coming out this week, so I'm like, they're kind of, in the same, they make the parts and things that Nvidia and other chip makers need, so I'm like, okay, well, this will they come out before Nvidia, so we'll get a chance to see how they do in anticipation for Nvidia's earnings. They too have a double bottom, but it's kind of been fading off, and I don't like these lower highs. That's not encouraging, but I don't know, we'll see. We still got this little teeny kind of double bottom ish, I don't know, we'll see. Got rejected here, seems like you can't get up above this level. I didn't grab this play at all, but it was just something I think we should keep an eye on just in case, because, their options are cheap, but you got to watch these spreads. Let's check it out. ADI. They are at they broke the mid-level resistance, so I don't know. Maybe they'll come down to P and then bounce, but that's something to watch. If they do, you can grab. If they don't break P, you can grab calls down here. This is not exactly the fastest moving stock in the world, but it's just something to keep an eye on. Lastly, Spotify. Now, we didn't call this out, but they went nuts today, okay? And that is because they just struck a deal with Joe Rogan, and they're going to pay that man $100 million to stream his podcast. I understand that his podcast has become incredibly popular lately, but Jesus Christ, that $100 million for a podcast? So don't give up on your dreams, everybody out there who's listening to this. If you have a podcast or something, don't give up on it. Keep going. Who knows? You might get picked up one day. So, got earnings over here. Last time, fell off the cliff. Now we're coming up against earnings too. We're a little bit over. We got to be overbought. Yeah, exactly. That's what I thought. We still are green on the MACD. Very interesting. 5-day chart. I don't know. I mean, if they can continue the momentum, I don't know. Maybe they'll gap down tomorrow. Come back down to VWAP. Yeah. Well, I don't know. Well, that's weird, because on the daily chart, it's 5 minutes. I'm like, what the heck? Okay, 1 day, 60 minutes. Alright, whatever. But anyway, I guess it was boring for most of the day then? That can't be right. Hold on. But yeah, so, okay, wow, yeah, see, that is the stuff right there. Alright, the thing is, we are up against a critical resistance level. If we break, are we going to bounce off R3? or are we going to break it and come back down to VWAP, which coincidentally coincides with this level here. So we'll see. Either way, you can maybe get into calls lightly if you're a risk taker. I mean, I really wouldn't get into calls until it comes back down here, but for you guys, I don't know. It depends on your risk tolerance. If you got balls of steel, you can get in calls when it bounces off of VWAP in this level here. Or you can anticipate the breakout and get into puts and then ride it down if you're scalping. If you want to buy calls, I would wait till it breaks this at least, get in small, and then see if it'll go up to R4, because typically things like to reject from here. So, it might chop in between this level and ultimately break up or down. So that's probably more than likely what's going to happen if tomorrow it doesn't gap all the way down on open because it was overbought today. So that is our plays, and let us look at my P&L today. Did I get clapped or not? Bam. So here we go. Today was a fantastic day. And it's crazy because, recently I haven't been having that much of a great stretch personally, because I've just been making some mental errors and doing things I usually wouldn't do, forcing stuff, revenge trading, emotional, just impulse buying. Never good, never good, never good. So, Baba, I told you guys, got in, and I start actually taking my own plays, because it's crazy, because, the plays that I talk about and go over in the videos, I'll go out and do something else. But then the plays that I post in my video hit, and I lose money, and I'm just like, what? Okay, whatever. I need to just start taking my own advice. I'm just overcomplicating things. So that's what I did. And as you can see, boom. BJ's, I told y'all that was not good. They took a dump today. We'll get out of this in the morning. NVIDIA, I swung puts because it had a gap down to fill, and I was hoping that it would fill that gap at least in the morning, but it didn't, and I got clapped. SPY, swung that. It made a little bit of money, but we got out too early. We probably could have made around $1,000 if we would have held to the end of the day. But whatever. Somebody in chat called out Target. Shout out to Jay. He called this out earlier. And the crazy thing is, we were looking at this last night, and I was like, you know what? Nah, I don't love it, because that's earnings. They didn't make it. They got clapped. So I was like, I don't trust them for this earnings neither, because they got earnings coming up. But I was like, but I saw the chart, and I was like, wait a minute, they're at a support level. Let me get in on these calls. And sure enough, boom. But I was actually up $900, but they fell back down, and I was like, nope, I'm getting the hell out. You're not going to lose me all my money sitting there waiting till it recover. I should have took profit, but nope, being greedy. But that's a lesson, another lesson out of this. Of course, Take Two came through with the drip. Oh, man. Take Two. I've been trying to tell people about Take Two, man. Woo! Oh, man. Their earnings is going to be crazy. I'm holding diamond hands, antimanium hands, vibranium, all that. VIR was a swing from yesterday. I grabbed some puts because they were way overbought yesterday. VIR went to the freaking moon yesterday. I was like, nah, biotechs are volatile. They're going to fall off the cliff tomorrow. And sure enough, they did. So, that's the roundup for today. In the last segment we got going on, we're going to invite some questions from Discord chat. Shameless plug. Remember, it's free $99 to join. We're live Monday through Friday, market hours. The link is in the description below. Let's get to it.
Asking all them questions. Asking all them questions. Why you asking all them questions? Making statements. Who? Asking all them questions. Asking all them questions. Why you asking all them questions? Making statements. Who?
So we got some questions here. So we got drugs. When will my father come back from the store? I don't know. Maybe never. Market makers. Mike P wants to know, can I explain market makers? That's very simple, but sometimes a lot of new people, they hear the word. It's like a buzzword, it gets thrown around. Most people don't really understand what that means. Basically, the short answer is institutions who get basically keep an abundance of shares on their books in order to create liquidity in the marketplace, and they charge for their services. Their fee for services is known as the spread, and we all as traders just love spreads, don't we? Not. But it's a necessary evil to compensate people, or institutions rather, for providing liquidity into the market. When you go and you see the bid-ask price, that is essentially telling you how liquid a particular security is. The farther apart the spreads are, the less volume and less liquidity there is on that security. So the market makers are charging more to make up the difference. When you see stuff with tight spreads, that means it has more volume, more liquidity. So basically the market maker is trying to make money off of the volume of the trades rather than, getting everything on one trade. All right. So we got gaps. What's the deal with them? How the market usually reacts to them and why. Gaps, we talked about this a little bit on SPY earlier. So gaps are areas in the trading that are basically where there was no trading at for the previous day. So like you hear people say SPY gapped up or gapped down, like right here, like the day before yesterday. You see this distance between here and here? That's what's referred to as a gap. All right. And what's said is, what's commonly known is that most of the time stocks will fill their gaps. So if you have a gap to the upside, because nobody got a chance to buy or sell in here. The price just jumped from here to here. So none of these orders, the limit orders that's sitting here, got filled. So, and remember, a lot of the trading is just algorithm. So when prices hit a certain point, it triggers a buy or triggers a sell. So nobody got an opportunity. People want to take profit up here from here. Like if I was sitting in a trade and we went from here to here, I'd want to sell. So there's a lot of sell orders sitting up here. If we hit that level, it could trigger, that sets off a rapid succession of sells orders. And boom, we just spike down real quick and we close this gap. So that's basically the short answer for gaps in a nutshell. So scalping, Fed asks, scalping, day trading, swing positions for someone with a smaller account. I would say day trading is dangerous for people with smaller accounts for a few reasons. Number one, you got to deal with PDT. And if you have a cash account, you have to partition your cash so that as to not use it, before the weekends. Smaller trade sizes. It just could be a headache. So for me, I know personally from my experience, and I can't speak for everyone else, but swing trading was actually better for me because if you analyze the chart correctly, you should be correct most of the time, barring any unusual market activity, and it's easier. You make more money long term too. You can make a lot of money scalping, but swings is where it's at. Okay, and tomorrow I'll show you a good example of that. And I've been experimenting with some stuff too that I'll make a video about. Are we expecting SPY to fill the gap from Friday? Yeah, we just talked about the gap. So, yes, at some point it will. I don't think it'll be this week. It could maybe be if we get a bad news catalyst. I don't know. We'll have to wait and see. But pretty much it's a waiting game. It's gonna fill it eventually. There's no question about it. The only question is when. So that is it for our questions. That's all the time we have for today. Remember, plan your trades and trade your plan. Okay? Bulls make money, bears make money, but pigs get slaughtered. Don't forget to subscribe and hit the notification button so you never miss an episode. Follow us on Instagram and join our Discord chat where we're live until 5 and we do something before 2 something. The links are in the description below. Until next time, XenoTrader out. It looks like our heroes were able to have a very fantastic comeback day. But SPY looks like it took a dump at the end of the day and is coming back down towards crucial resistance levels. Will SPY be able to gap up tomorrow and recover, or will we trade sideways or gap down? Find out on the next exciting episode of Trading Bull Z.